Shabbir.
Okay, yeah, just making sure you're ready. Okay, so thank you for coming to our fifth presentation. Today's topic will be about risk and asset classes. So if Aryan, you want to just keep letting people in, or Nishal, whoever's doing it, and then if you want to move to the next slide. Just as always, if you all could either scan the QR code or go to the URL and fill out the attendance form. We'll give you all a few minutes to do that real quick. Okay, I think we're good to move on probably, Aryan. So these are just the links for the all branch game with all the other Cash Club branches and then our specific branch game here at Capel. Make sure, this is on the investor app, so just make sure you're signed in with an account with your name, and then you are in both of these games. That way we can track your progress and you can be awarded prizes a quarter year. So yeah. So today's presentation is going to be on asset classes. Specifically, it's going to be on things like dividends and dividend investing. And so if we go to the next slide, we have a quote from Ray Dalio, who's a billionaire and a hedge fund manager. The quote says that there are two main drivers of asset class returns, inflation and growth. So essentially, he explains how inflation and growth of various securities in an asset class are two factors you should always remember when calculating how much return you're aiming for. So basically today we're going to kind of explain what an asset class is and why we need to look at the inflation and growth of securities in order to project the likelihood of like positive or negative returns on those asset classes. So if we go to the next slide, we can see what an asset class is. So an asset class is a group of investments that have similar financial characteristics. Basically, they have like the same laws and regulations. And so they're made up of instruments that behave similarly to one another. And so the three main asset classes are equities, which are stocks, which are what most of us are able to invest in. Even like when we go from like a starting point, we will usually start with like, even if it's like day-to-day or long-term trades, we'll use stocks, which are called equities. They're in that asset class. The second one is called fixed income. These are like bonds. A great example of this is like government bonds that the government will issue in order for us to pay back their debt or anything they've deficit financed for programs. And so they will sell large chunks of essentially bonds, which means that we're just paying them. And in return, we're essentially investing in the government's debt. And we're going to make a certain amount of money off of that. And then the third one is cash equivalents. And so there are obviously other asset classes, things like real estate and cryptocurrencies, but the three main ones are listed here. And so we have an example of IBM, Microsoft, and Apple, all similar laws and regulations. They have operate under similar like antitrust laws, and they also have similar regulations in the market. So they're usually grouped together in an asset class. So if you want to go to the next slide, here's just a chart that kind of compares IBM and Apple, which are from the same asset class, which is the equities asset class, and they're both technology stocks. So usually there won't be a lot of discrepancies unless something's happening to a specific company. And so what'll happen is the fluctuation of the stocks should be relatively similar as long as the market is usually at a stable point. And so we can see that their performance often kind of follows one another. So basically, in addition to the rest of the market as a whole, their performances kind of fluctuate similarly. And when one might slightly go down because of the competitive nature of the market, the other one might slightly go up. We can see like November 2016, we see that Apple's rising a bit while IBM's falling a bit. That's all always because they're in the same asset class. They have the similar values and similar prices that are put on the market. And so when those kind of fluctuations happen, usually either if they're in the same asset class, they'll fluctuate accordingly. So this graph is just kind of there to show, that when you're in the same asset class, we'll usually see similar behaviors occurring from companies. So yeah, remember we talked about the three main types of asset classes. So the one we focus on most is usually equities like stocks, because these are companies that we can kind of relate to and are familiar with. But obviously there are fixed income, things like bonds, and then cash equivalents for asset stocks as well. So yeah, let's specifically, we can talk about equities. So again, most commonly used asset class. It's the one we cover here the most. And so in equities, essentially, it represents the amount of money that would be returned to the shareholder if all of the company's assets were liquidated, or if all of the assets were returned back into the original hands of the investors. And so the shareholders' equity in a company is essentially the total assets minus the total liabilities. And so the reason equity is usually important is because it represents the value of an investor's stake in the company. So for example, this, to put it in a very like simple term, when we look at the market and we look at the fluctuations of companies' values, these are essentially their equities, right? It's what we're valuing the company at, and it's what our investment is valued at. So equity basically just kind of represents the value of any investor's stake in a certain company. The second type we have here is fixed income. I used the example of government bonds. There's also corporate and privatized bonds, things from like the private rather than the public sector. It's essentially, this is an asset class that pays investors fixed amount of monies, right? And these will usually be more secure investments. For example, if the government is to give you a bond or is asking you to buy into a bond, it'll be a really, really secure investment with usually the standard interest rates that a government has on a bond, just because these are like a set amount of cash that isn't really based as much on risk, which is why these are usually low risk, low rewards. And other stocks, specifically in the equity classes, will be possibly even higher risk, high reward. So this is more of a safer investment just because it's in the fixed form of a dividend and there's like a certain interest rate on the bond. And so at maturity, essentially, investors have been usually repaid the principal amount of money and whatever interest they earned. So it's always a safe investment. And the most common application are obviously government or corporate bonds for really people that just need money. Now, the final type is cash equivalents. And so cash equivalents are an asset class that is meant for short-term investing specifically. And what a cash equivalent is, it's the total value of cash on hand, including items similar to cash. So this is like a low risk, low reward situation. Once again, an example is a US government treasury bill. Basically, the companies will lend the government money and the yield is the price of purchase. We don't see this as often, but what a cash, like especially like in a market where I guess the average American would invest, because these are more things that maybe like the US Treasury might use. But we do see these. These are kind of similar to dividends from public bonds, things like government bonds, because they are, in a sense, low risk, low reward. Whatever you're putting in, you almost know the amount of money you're going to get back. It's not really a situation where you have to create predictions as to where the market will go and how your money will end up doing. And so it's similar to a dividend in that kind of example. Now, there are obviously alternative investments, as we discussed at the beginning, different asset classes. A really common one is real estate, where people will invest in things like land and buildings and the natural resources near them and try to make profits off of those. Again, those are obviously, they have more risk than things like government dividends and cash equivalents. We also, I think the other most common one I want to look at here is cryptocurrency, just because this is a more growing type of investment, and it's actually separate from an equity just because cryptocurrency is essentially you're investing in the value of a currency rather than a company. And so it's subject to a lot more fluctuation and uncertainty. So we would say, if anything, these have higher risks. So they have their own asset classes. So over the years, we've had those three traditional asset classes that we discussed earlier. But because the market always grows and there's new innovations and opportunities for investors to invest in different types of things, almost, we've created newer types of investments where people are actually commonly investing in these things today. And so that's why we see growing markets for real estate and growing markets for cryptocurrency. But the three main ones that we did focus on were the equities, the fixed income, and the cash equivalents. Okay, so now going on to the investor of the week, it looks like it's Tejas. he started with a capital of 1 million and he's at 1.3 million right now with an 8.7% return rate. Is that this week, Aryan? The return rate?
Yeah.
Yeah. So congratulations to Tejas. Thank you so much for showing up to the meeting, Tejas. Yeah. So okay, so we're almost done here. If you want to become an officer, obviously, we're all seniors. So next year, there's going to be a lot of openings for officer positions. So it's good as a junior or a sophomore to become an outreach associate right now. So go ahead, and if you'd like, we can wait on the slide for a few minutes, and you can just scan the QR code or use the link to go and apply. It doesn't take too long, and it could benefit you down the road in terms of this club. All right. I think we can go ahead. Okay, just make sure you're staying up to date. We have the main branch with the at Cash Club Corp on Instagram, and then our branch is at cashclub.capel. So follow both for more information on promotions and meetings and special events we'll be holding throughout the year, if we get an opportunity to do so. And yeah, that about wraps up the meeting for today. Thank you for coming. If there's any questions, you can always ask Aryan, Nishal, or I, or Mr. Stewart. But yeah, thank you for coming today.